Alright, what's going on everyone? We're going to be going over my trading strategy and how I approach the market and everything that goes through my head on a daily basis when I'm trading. So a little overview, we're going to be going over the different types of trading. There's many different ways to trade stocks, commodities, Forex. We'll be going over the different tools that I use to trade, the different ways you can learn, view the market. Then we'll go over my background, my story, how I first got into it, where I started at. Then we'll go into my strategy and actually how I approach the market on a daily basis, what I do to have success trading the stock market. Then we'll be going into the actual charts, looking at trades that I've won and lost. I'm not going to sugarcoat it. And yeah, so let's get started. Alright, so the two stocks that I trade on a daily basis are SPY and QQQ. Mainly just SPY though. SPY moves a little bit slower. It's a bit easier to trade and I've had more success with it. What SPY is the S&P 500 index or ETF. It contains the top 500 US companies traded publicly. QQQ is very similar, but it's the top 100 tech companies and it moves a little bit faster, so it can be a little bit more challenging to trade. That's why I mainly use SPY. Alright, so starting with the ways to trade, there's three main different ways people trade. First is futures. That's what I trade. That's what I'll be getting into the most, explaining, going over. Options. Options is what I started out with. It's very beginner friendly, I guess you could say. Easiest to start with, very little capital, and very easy to first get into. Then there's Forex. I don't trade Forex. I don't touch Forex. That's foreign exchange, which is US dollar to Great Britain pound and the euro, all that. I don't touch that. I don't know if I'll ever get into that, but who knows what the future holds. Alright, so starting with options. Options is actually what I started out trading. You can trade most blue chip stocks, so this is going to be Apple, Tesla, Nvidia, any other stocks you can think of, Boeing, Nike. You can also trade SPY, QQQ. That's what I would use options for. So when you're trading options, you're trading a contract and not the actual shares to the company. So you either buy call contracts or put contracts. Calls are when you think the price is going to go up, and puts is when you think the price is going to go down. I'm not going to get a whole lot into options, how they're traded. It can be pretty confusing. There's just other YouTube videos out there to explain options if you want to get into this sort of thing. Theta. Theta is a Greek, so contracts have an expiration, and so the closer you get to that expiration, the contract values will decrease. So that's the biggest negative with options. That's personally why I switched to futures. You don't have to worry about contracts losing their value over time, but they're very easy to start with little capital. You don't need much money to start trading them. Again, if you want to get into options, just go on YouTube, search option trading, and you'll be able to find anything you want to know. So starting with futures. Futures is what I trade on a daily basis. So futures follows indexes such as SPY and QQQ. It also follows commodities such as gold, silver. You can even trade corn and like rice if you wanted to. I don't know anyone that does that because I can't imagine the markets move very much for that. But you could also trade Forex, Great British pound, US dollar if you'd like to. SPY on futures is ES. It goes by a different ticker name, and QQQ is NQ. You just got to be mindful of that when you're looking at the charts. So futures are very unique in their contract sizing, so you can either buy E-minis or micro E-minis. The difference is a micro E-mini is 1/10 of the size of an E-mini. So if you were to buy 10 micro E-minis, that would be equivalent to buying one E-mini. Personally, I only trade in micro E-minis. The reason for that is as in the middle of a trade, I can trim more. So if, say, for example, I had 10 micros, I'd be able to sell 5 of them once the price moved up a little bit, and then sell the last 5 after it moved higher, so I can lock in profit as it moves up. But if I had one E-mini, I could only sell at one point instead of selling at multiple times. Futures also brought around the concept and the popularity of funded accounts. We'll get into that later on. I would not recommend funding accounts if you're just starting out. That's something you should do down the road. It costs money and it's risky, but the money that you can make back in return is significantly more than you'd ever be able to obtain with your own capital, unless you have plenty of money to just throw around in the stock market. But most of us don't, so funded accounts are where you can get into the market, make money, or make significant gains a lot easier, if that makes sense. So the different trading tools that I'll use, we'll start with Forex Factory. That's for news. News plays a significant role in the market, depending on what news comes out during the morning, right before the market opens. That can determine the direction that I'll be trying to trade for the day. We'll get into Forex Factory, explaining how to view it, everything like that in just a minute. There's TradingView. That's how I look at the charts. It's free to use. Same with Forex Factory. All this is free, except for the funded accounts, obviously. But TradingView, that's where I view the charts. We'll get into that. Webull is good for trading options if that's something you want to go towards. And then Tradovate. Tradovate is what I use to trade futures. We'll get into looking at that later on. Then if you're just trying to get in, no money at all, you don't want to spend, I mean, of course you don't want to spend any money at the start until you know you can have success. So with NinjaTrader, I'll show you guys in a minute, but you can get a free demo account so you can just practice trading futures. You could just go in, experiment. It's completely free. You get a 14-day trial, I believe, on the simulator. And you just, after that 14 days, you can just cycle through emails. So if you want, just go create another Google email and then sign up again. You get another 14 days. And then Apex Funding, that's what I use for my funded account. I'll show you guys what it looks like. Again, I don't recommend getting one until you've at least traded for free on NinjaTrader for, I don't know, a few months maybe. You don't want to risk any money until you know that you can have some success. Alright, so starting out with Forex Factory, this is what I use to check the news. So if we go back, let's see, to Thursday, okay? So when you're looking at this, the news will either come out, it'll come out black like this, which means neutral. It doesn't affect the market at all. It'll come out green, or it'll come out red. So when you see this, usually you would think green good, red bad, but this is for Forex specifically. So when you see it, when it's green, it affects the stock in the inverse way. So when it comes out green, you want to think that the price is going to go down, and when you see it red, you want to think the price is going to go up. Another thing I should mention, I forgot, the folders. So there's different colors on the folders. Obviously you can see that. So there's yellow, orange, and red folders. Yellow is like low impact. Oftentimes it doesn't move the market a whole lot. Orange is like medium. So, I mean, regardless, you want to be aware of all the folders, no matter the color. But red ones, those are the ones that really move the market. Those are the ones that you really need to be careful for, because you'll either, if you're in a trade during those, you'll either make a whole lot, luckily, or lose a whole lot, because you have no idea which way these are going to come out. Whenever you see these colors, so this is green, you want to think when these folders came out, and with all these being green, that market took a dump. So we'll look into the charts later, but whichever way these come out is the way I typically trade for a day. So since these came out bearish or going down, I usually try and look for trades that are going down. The next thing, TradingView. We'll go over it a little bit. So up here, well, you'll make an account first, free to use. They have premium versions if you want, but I don't use it. You don't need to. So first up here, this is where you can search for whatever you want. So Apple, you can look at Apple if you wanted. SPY, that's why I trade the most. These are all my levels. We'll get into that later. QQQ, this is what it looks like. So there's different tools on the side here, the chart. You can move it around. Different time frames up here. Personally, I trade on the 1 minute. Again, we'll get into that when we go over my strategy. 5 minute, 15 hour. Yeah, all that. This is the best software, best way to chart the graphs. All that. I'm going to skip over Webull for now because that's options. That's a whole other thing. You can look that up on your own on YouTube. You can find everything you want to know about that because I don't touch that anymore, so I'm not going to go over it. But we got NinjaTrader here. You can sign up for a free 14-day trial. You just open an account. You sign in with Google, whatever you want to use, and you can practice trade for 14 days for free. And then after that 14 days, you can just make a new email or switch account and just practice again. It's a good way to just get into futures, what it's like, how to trade it. That we'll be going into Tradeovate later when I'm showing you my trades. And let me pull up real quick. Apex. This is where I purchase my funded accounts from. They're down here is all the prices for them. They have sales a lot of the time, but I would, again, don't buy these right away. Alright, so my story and how I got into this. So I graduated a year and a half ago, and I was following everyone else, my friends at the time, and just my parents, and going to college, right? And I've always been into stocks, so I started going for finance. I went for a semester, but I quickly realized that finance is a lot more than just stocks, and I hated it. So I left, came home, did community college for the spring semester, also hated it. And then so I decided to drop that completely, start working full time. And over the summer, I just kind of enjoyed life, and then tried to figure out what I was going to do. And as of last August, September, around then, that's when I started looking into trading and taking it actually seriously for the first time. When I first started taking it seriously, I was trading options on Webull. I just put in $500 to start. I'm going to be honest, well, I did paper trade before then. Paper trading is the best way to get started. You should always start with paper trading, just looking at the charts, just getting into it. Never put in money right away. I know so many people have lost hundreds, even thousands. Personally, I've lost not too much because I always paper trade before I put in money, but I lost a few hundred at the start. Nothing too crazy. I should have paper traded for longer, but I just wanted to jump into it. Everyone wants to put money in, wants to start winning, but a lot of people think trading's like a get-rich-quick thing. It's not. It takes a lot of time and a lot of effort, and you really got to be committed. So I traded options from, so I started in August, paper trading, traded all August, September. I think October was when I first started putting money into options. I started trading that a little bit. I didn't really like it, options. I mean, it's just a different style of trading. Then I knew some people that were doing futures. I talked to them about it, and I decided to give that a shot. Trade on NinjaTrader for October for free. And then November, December, somewhere around there, I'm not exactly sure, is when I started actually buying funded accounts through Apex. And that's where I could really start to see my success and my strategy finally start to work. And it's kind of paying off all the time and energy I put into it, which was a great feeling. And like anything else, it's a skill, right? It takes time, it takes patience. And so, over time, I slowly built up my strategy. I've been in Discord for quite some time. It's called Limitless. Great people. Everything you want to learn about trading, that's the place to go. I can link it in the video if you want to join. Check it out. It's free to join, but then they have a membership, which is $100 a month. I think it's worth it, but you can decide that for your own. I've been with them since September, and they've really helped me along my journey, getting to the point where I'm at. And just taught me so much. I used a lot of their strategies to help develop my own and how I now approach the market. And I mean, from this picture here, you can see this was last week. This is the best week I've had yet. 100% win rate. This is the first time I've ever had that, because losses are inevitable, right? You shouldn't look at this and be like, wow, he wins every trade. No, I take losses. It's just a matter of making your wins more consistent and making more money on your wins than your losses. Also says here number trades 18. This isn't accurate because every time, I told you earlier, I trim as the price moves. So I take off half of it, and then I take off some more contracts, and then I'm fully out. So really last week I only take about 1 to 2 trades a day. So when it says number of trades, I think last week I only took 5 or 6 at most. But I mean, you can see too, my trades are only a minute 40 long, quick trades. But seeing this has been honestly pretty crazy to me because, from where I started at, losing some money, looking at the charts, seeing all these candlesticks, and not even knowing what I was looking at, to being able to be consistent and actually start to profit. And at this point, I mean, I can confidently say I'm making more from trading than I am from my day job, which is a crazy thing to say because looking at myself 7 months ago, I had no idea what I was going to do with my life. And I mean, this is still just the beginning for me. Alright, so first thing you need to know about trading, looking at the charts, candlesticks, you'll hear the words bullish and bearish. Traditionally, they're green going up, obviously, red going down. When you're reading these, so there's the solid part and then there's the wicks. The solid part on a green candle is where it opened and where it closed at, that price during that time period. So each candlestick represents an amount of time. If you're looking at the 1 minute chart, each candlestick is 1 minute. So when you look at this one, the price, these are the wicks. That's where it reached in the 1 minute. So it came down, but it opened here, came down, then it moved up. It reached this high, but then it closed at this price. When you're looking at a red candle, it's the opposite. It opened up here, it reached up here and high, but came back down, went as low as there, and at the end of that 1 minute, it closed there. So going in and looking at the charts, I changed my candlesticks to white and gray. It's all a psychology thing. When you think red and green, you think good and bad. So I changed it like this. It just helps psychology based. Trading psychology is a whole nother thing. I don't know if I'll get into it in this video, but so when you're looking at the white candles, those are ones going up. Gray for me is going down. But you can see like each candle's different. You can see where it opened, where it closed, where it reached in that time period. And the candlesticks basically tell a pattern about the chart, where price is moving and the flow, I guess. So the main thing that I trade, it's called supply and demand. So these are zones in the market where the price tends to bounce because the whales are like institutions or banks. That's where they oftentimes put limit orders. So like when price enters this area, it'll often come down. So for example, if you look at this chart, we came up, it bounced off this zone, came back down, reached into this zone, went up, back into this zone, came down. Then we broke the zone. It came up to the next one, came down. So these are just areas where the price tends to bounce because the people who move the market, this is where a lot of times they buy and sell. So you just have to find these areas and then follow the way the market's moving from there, I guess you could say. The other thing that I use, I'll link down below, it's a free book, The Candlestick Trading Bible. This is probably the most important part of my trading strategy, just looking at candles, the candlesticks, and how they react. Each candlestick tells a different story about price, and these are what I use to base off when I buy, when I sell, when I get out of a trade, when I hop in the trade. These are, to me, it's the most important part. Like you can have the supply and demand levels, but if you don't see the right candle, and you hop in just based off the levels, you could really lose money. And so I'll link this below. Check it out. This is the most important part of my trading strategy, I'd say, and the thing that really has improved my success. So when I am trading, usually I trade level to level, zone to zone. So here in this trade, I trade from this zone down to this zone. I trim at each level I get to. So here I would have taken off half of my contracts, and then I usually hold it until I see a reversal or indication that the trade's going the other way. So here we had a doji candle, so that's where I would have been fully out and would have ended that trade. I always put a stop loss so you don't lose more money than you have to if it were to go the other way. I put that right above the top of the local high candle, right up here. Luckily we didn't touch that, and we went down. Alright, so when we actually go into the chart here, we're going to be looking at SPY. Not really QQQ a whole lot, because again, I don't trade that very often at all. Some things to take note of right away. Down here, bottom right, this little gear icon, if you go to session, I put on extended trading hours. That's what these areas are, orange and like this blue area. So this is aftermarket and this is pre-market. You don't trade during these times. I mean, you can, but you need volume to trade, and there's not a whole lot of volume. I just like to see what price is doing when it's not actively being traded, see what news did. Here's a news event. That's why it shot up there, just to see what the market's looking like ahead of open. Then next, in order to find these zones, a lot of times I'll look on like the 5-minute chart. Usually I trade on, or not usually, what I always trade on is the 1-minute chart to find the best entry. But on the 5-minute, that's where I usually find my zones. So I just add this one, as you can see it started here. But like, I mean, here's a zone right there. I created these a long time ago, but you can see they're still holding. Reach into that zone, came up this zone, came down there. Then, oh, just moved that by accident. But you can see they hold time and time again. That's what I use to mark out these zones. I mark them out over here. I use the square, rectangle, draw it out like that, and then up here you can do a setting, settings, and then extend right so it goes all the way out. After you have these zones, I go into the 1 minute chart here and just look for a good entries. Well, look at the candlestick Bible that I showed, but you can find, I just base my entries off candlesticks. So when you look at it come into a zone, I wait for the candlesticks to tell me. This one I didn't have this zone yet since this is a high we haven't reached in a very long time. But here we came up into this zone. I saw this doji candle. If you look in the book, you'll see what doji candle is. I saw it close below the zone with this long wick here above, indicating some selling pressure. Hopped in here and wrote it down. I sold off most here, and then this is another doji candle with a long wick down. I got all out of the trade there. It went up a little bit, like I thought it would. If I held, I mean, could have made some more, but you know, I don't take on that kind of risk, and I played safe. And then on Thursday, Thursday's when we had the very bearish news, all those red candles, so I was trying to trade it to the downside, like we talked about, follow the news. I saw us break this zone, but we held, came back down. I saw these two candles close below, doji candles, and we were in a little bit of an uptrend. I hopped in here, got out most contracts here, and then held down to there, but I mean, if you look, we went trended down most of the day, and that would have been crazy trade, but I don't risk anything. Trade to zone. Saw this white candle going back up, and I was fully out then. Wednesday, we had some bullish news, meaning I was looking for something to go up. I didn't catch this initial trend up. We rejected off this zone, came down, broke it. I took a little trade here. It wasn't a huge trade. I got in right around these two candles when I saw that start to go upwards. I hopped in here, wrote it up, and then got out right below this zone. Wasn't a huge winner, but still another winning trade, and it's a good thing I got out then because we dumped after that. Trended up eventually, so if I held that long, would have made some more profit, but I'd try and be in and out. And I always trade only from like 9:30 to like 10:30 at the latest. It's when there's the most volume, and I just had the most success around this time. Tuesday, we had another nice day. We opened up with a little consolidation here. I didn't trade any of this, but it finally broke down. I saw us wick into this zone here. I didn't enter there. I waited to see what the market was doing. Then we had this nice bullish candle wicked in again. That's where I hopped in. I rode this all the way up to this zone. And we had this like almost like a doji. That's where I exited at, and I wasn't going to hold past that. Got out all my contracts, came back down, eventually went back up, but again, just playing it safe, good risk management, getting out, taking a winning trade. Now, looking back at a couple, not the week before last week, where I took a loss. We saw this market open with some consolidation. It was a little hard to trade. Probably shouldn't have got in here when we were just trading in this tight zone, but I got in right here, and I wanted to go down. I saw these long wicks up top, and we initially did, but we didn't reach my zone. So I didn't sell anything, and we came above this area right here. I got stopped out right here. Took a small loss, nothing huge, you know, had my stop loss set, so as soon as we hit that, and the price kept going up, obviously, we got out before we lost a whole lot. Still, I mean, initially it was a winning trade. Should have got out here. I was just hoping we could push into the zone. Took a small loss. Just been going back here looking at some previous trades. So this was right after we had some news that came out right at 10 o'clock. We came up into the zone that was holding, you know, when the market opened. Saw it wick in and closed below, long wick up. Entered there. We got some selling pressure and then wrote down to this zone. I got all out here, I believe. I saw we started to trend back up, and so I took most out here and the rest out here. Another small winning trade. Could have held it. Went down some more, but playing it safe. Another thing I like to play is what's called a retest. So when we break these layers here, we came down, almost touched into the zone. If you see here, we came back up and tested the zone that was previously holding the market. Came back in. I like to play retest a lot. Wicked once right there, then came up, wicked closed below, enter there, write it down. So either a hold on the zone or what's called as a retest when the zone gets broken, come back in and drop down. And if you see, this layer held for quite some time here. Eventually we broke it here, came back down, went up. But yeah, make sure you look at the the candlestick Bible. I mean, the candlesticks really tell a story. That's what I base like all my entries on. Seeing like, well, I didn't enter here because if you see we had a long wick above. Long wick aboves like up here usually indicate selling pressure. So I didn't enter here. We bounced there. That's why I wouldn't enter there. Here we were kind of consolidating up here. I like to see a clean bounce usually. Typically like a smaller bounce like that. Doji candles often represent the market going in a different direction. There's also engulfing, candle engulfing. So if we have this white candle going up, this candle fully engulfs it. We moved down a little bit. Another doji at the top of the market. Came back down, but yeah, the candles really, that's what I use to base all of my entries and exits. Alright, so here on QQQ, I just want to show you guys how I mark out my zones. Again, I use the 5 minute. Just look for some price bounce. So see here we had a bounce. Confirms with right here. So we can mark this area right here. Reached in there. We want to mark this high right here. That's a good zone. And if you look ahead, like right here, we had a bounce off that. Bounce off that. Here we broke it. Bounce right there. Consolidation around that level. Here's this level, held it there, broke through a little bit, came back, held, pushed it higher. It's just easy way to find some zones. Just look at previous price movement where it bounced. Here's a level, bounced right there and there. And the last thing, I just wanted to show you guys what Tradovate looks like, where I place my trades. There's a little area above this you guys can't see, but it just has your account and how much money you have. Obviously, I'm not going to show you guys that. But here's the different charts. So because I trade micros, which are smaller than minis, you put an M and then ES. Usually it's ES for minis, but I trade micros, so it's MES. Same with NQ, except you put an M in front for micros instead of minis. And typically I'll trade 10 micros each trade, and here you can buy bid, buy market, sell market, and sell ask. So buy is when you're wanting it to go up, sell is when you're wanting it to go down, and then if you want to get out the trade quickly, you can just hit this, exit, market, and close, and you're out the trade. The difference between buying the bid and the market, the bid when the price is bouncing, because it'll oftentimes bounce back and forth pretty quick, the bid will be the lower amount, and the market will be like probably one tick above. So when you're trying to get into a trade quickly, you want to buy market. But if you're trying to get the best entry possible, you should buy bid, because when it drops down just a little bit, then you'll be in. It just gets you a better entry. Same thing as this. And then so when you're trying to buy, you can adjust this to like half the amount and then sell at market is usually what I do. But when you're trying to go down, you first sell it, and then you can buy it back as it moves down. And then if you see you're in profit, just exit at market close, and then you'll be out of the trade just like that. For those of you who are going to start on NinjaTrader using the 14-day trial, it looks pretty much the same. I believe they have a tutorial when you first start it. It tells you like everything you need to know, explains it, and everything's simulation, so it doesn't matter. You can win, you can lose, just get some experience. Right here is where they tell you how much you're either negative or you're up. Yeah, you can look it up. Just look up NinjaTrader, trading futures. You can figure out contract sizing. I only trade 10 micros at a time. I don't over leverage. When you put in 20, double the amount. I'll get there one day, but I mean, the more contracts you have, the higher the risk, the higher the win or loss. So I keep it smaller for now. Just still trying to get consistent and keep maintaining profitability. I think that's pretty much it. If you guys know me in person, feel free to ask me questions. You can leave comments for questions. If there's any follow-up videos you want, you can let me know. We'll see how this video does, what you guys' thoughts are. Just wanted to go over my strategy, give anyone who wants to learn a little taste. I mean, YouTube, you can find anything nowadays, so yeah, feel free to leave comments. Let me know if you want any future videos or any questions. Thanks.